All right, ladies and gentlemen, welcome back to another episode of the Market MadHouse Show. My name is Cyprian Francis, and with me, as always, the co-founder, head of trading development, and a few other hats, Mike Patton. Good morning to you, Mike Patton.
Good morning. Good morning, Sip, and good morning, everybody.
Today is May 11th, and I believe the headline news to start the day is all this inflation chatter. What are your initial thoughts on everything that's taking place in the news that's coming out this morning?
Well, it's crazy I mean, every single stat. So the market had expectations priced in, and for every one of them, every single one, we got more than expected. So inflation just is out of control right now. And every level, it's out of control. And I know the analysts, they were actually anticipating greater inflation. They were really thinking, like, okay, things are getting, but it just went farther than expected. So now, what's making everyone worried as far as investors is that the Fed, the last time they met, which was, a month ago roughly, they said that, three rate hikes of 50 basis points would seem reasonable. We're not going to go any farther than that. We'll rule that out. Well, now they're saying, well, we might have to do one, three, 75 basis point raise in interest rates at the end of the year. That's saying everything. That basically says, like, that quick, within weeks, totally, a different picture came out. So that would put us on pace to, I think this will be the highest rise, like consecutive rise, that we've seen in over, what, 25 years plus, maybe even 30 years. So this is quite impressive stuff. So markets don't like higher interest rates, especially not tech stocks. They hate higher interest rates, brings them down sharply. But I think there's no way out, because where else we're going to go? If we lower rates, it's just going to make inflation worse. So the only way out is to kind of drudge through the volatility and difficulty that the higher rates are going to create. Hopefully, we get to the other side and everything's okay. But I think we're in for a long run on inflation. I don't think we're anywhere close to this being over.
Yeah, and so I guess the argument would be, are we going to do 75 basis points versus 50? We did have a significant sell off this morning. We've rallied a little bit, but it looks like we're dipping back down. We'll
Right?
see how the rest of the day continues. But that's just the U.S. inflation news, right? We still have
Hmm.
the war going on in Ukraine,
Right?
and I believe there's some news coming out of China that doesn't make the case for things getting any better.
Right. So China is continuing to intensify lockdowns. They are hard set, at least as of now, on a zero COVID policy, which of course is impossible. But essentially, what they're saying is, we're not going to tolerate COVID at all. If it's there, we're going to squash it out, you know, whatever it takes, almost whatever it takes. But um, let's just say, like, it's not working, because in reality, maybe when COVID was not quite as contagious, this would have worked. And I think that was their earliest success, like, just lock down every city and stop everyone from moving, and it's going to take care of itself. Well, I don't think it was ever quite as effective as they claim, but apparently they were able to keep it under some control. Now, clearly, not the case. This is just difficult for them to stop, so they're shutting down more train stations, more restrictions on what you can do. In Shanghai, apparently the numbers are improving, but the government is still forcing the lockdown, and it makes sense to me, because their policy is so aggressive. But it's gotten to the point now where I was a little surprised at this. The World Health Organization starts to criticize them and say, "Hey, this is not a sustainable policy. You got to do something else," which is very surprising, because up until recently, the WHO has been uh, they've been very positive in their statements about China and how they managed the pandemic. Now, totally different. So, everyone say, well, increase vaccination rates, etc. China has billions of people. It's not that easy to do, and with their policies. as far as I understand, the vaccines in China are not as effective as the ones over here. So that means that you have to do more of it to get a comparable outcome. So I don't know. See, China creates a deflationary pressure. For those who don't know what that means, it just means that if China is not able to continue to function, they are the production powerhouse of the world. I mean, more things are manufactured in China by far than anywhere else. So if they are slowing down in production, it doesn't just affect China because a lot of the companies, a lot of the goods and services we buy or goods, they're manufactured in part or in whole in China. So if China can't produce, even if a company's here in the US, it still means that, hey, we can't put out any output. So that's bad for the global economy. I think that was one of the reasons why stocks were slumping, as were oil prices. They were both slumping at the same time. But with this inflation data and also some other developments with Ukraine, we have pressure on energies again, which is what we would expect. And speaking of that, in Ukraine, peace negotiations at this point seem to be completely off the table. Um, and I do blame the world for this, not just one person or another. I do think that overall, world governments have not mostly, especially the more powerful world governments, have not been very proactive in trying to broker peace, except for India. India has been a standout, and I would say in that, and maybe to a limited extent, in some extent, I would say France as well has been standout in their attempts to broker a peace. But pretty much everyone else has been just drawing these hard lines, like, no, we're not going to budge an inch or anything. And in my opinion, when it comes down to it, this can't be resolved unless people are willing to negotiate to some extent. Something, all negotiations require something's got to be given up. You can't say, well, I want everything, you get nothing. There's no negotiation there, right? So Ukraine's going to have to lose some things they don't want to lose. Russia's going to have to give up some things they don't want to give up. But I do think it's possible. I really think it's possible. But I don't think that the current global leadership is in the mood to push that direction much, and therefore here we are. So I think this is going to continue to escalate, as I said many times before. We're going to see this thing drag out for months, maybe longer, and I probably longer now. I mean, the way things are going. So hopefully it doesn't, but that's the way it looks. So that puts pressure on energies. We got. I was told this morning. I didn't verify this, but I heard that Ukraine is cutting off natural gas being shipped through their country from Russia to Europe, which is and I don't know what to think about that because if that's true, that means that Europe's not getting that gas. And wow, I mean, I've seen the prices going up for natural gas. It's crazy. But if that's the case, if they're actually doing that, then that makes it even worse. So everyone's suffering then at that point. So we'll see.
Yeah, well, looking at the Madison Trading House dashboard, I am seeing a lot of green in the oil and gas sector,
Yep.
which kind of brings me to my next question, and that is, if inflation is bad,
Hmm.
if the supply chain is getting crushed,
Hmm.
what is there to take advantage of to the upside? And I guess we kind of answered that with energies, and that's purely based on a lot of the geopolitical things that are taking place.
Correct. I mean, the safest bets right now, and the this. So we're looking at the main view. When you log into the Madison platform, this is the first thing you see. So it's just a general market overview. You can look at, the SPX, the Dow Jones, the Nasdaq, et cetera. I've got the S&P on there because generally speaking, I think the S&P is a better gauge of the overall market. Down below, we've got advanced declines, meaning that it's showing us how many stocks are advancing versus how many are declining on the different exchanges. And then finally, down below, which is the more interesting metric, we're looking at stocks that are at 52-week highs or lows. And you can clearly see, like in this little graphic here, that these lines that are pointing down, that's showing me the number of stocks that are in the trading on the NYSE that are at 52-week lows. And you can kind of see like the last time we had any significant number of stocks at 52-week highs was basically last year, well, not last year, but a while ago, like this, or I should say April, not last year. But since then, consistently, we've seen a really big shift where we have pretty much all these stocks at 52-week lows and pretty much none at 52-week highs. So if that's the case, and it is, that means that a lot of stocks are trading on their lows, but we can look for stocks that might be moving up, and they tend to be oil and gas. A lot of the oil and gas companies are not anywhere close to 52-week lows. A lot of these are closer to 52-week highs, right? So energies and other commodities, like not just energies, but also you can look here, like where's chemicals, tobacco products. I mean, for the most part, if they're commodities, there's a good chance that their stock is up near its highs. And also medical, like drugs and things like that. These can also, they usually are and usually these sort of companies are inflation proof or recession proof, because people don't stop using medication because of a recession. You still need to use it. Um, and if they're having problems financially, the government always comes in and subsidizes. So big corporations that are in the medical space don't usually lose to these sort of environments. And with COVID still around, that also gives them some benefits too. So we're basically seeing a splitting apart of the economy where software, hardware, other things, media, they're getting hurt. But when we look at oil and gas in particular, or other commodities or drug companies, are typically doing well. Banks are a mixed bag. I mean, technically, banks should make more money if interest rates are up, but there's a catch that the higher interest rates go, the less people want to borrow. So then it can negate itself. So right now, I would say banking is one of those where you're going to see really volatile swings. But safer bets would definitely be, they're going to be volatile, but I would definitely say oil and gas and anything related to like commodities, wheat companies like let me show you an example of that. Jumping to the dashboard really quick. Archer Daniels Midland. Oh, sorry, I put the wrong one in. There you go. ADM. If we look at it, this is what its chart looks like. So it's not at a 52-week high, but it looks way better than most stocks. So this is a wheat focused company. So anything in the commodity space, et cetera, those are going to be your best bets. And of course, with this, we can drill down to look at different sectors individually. So if I want to check out chemicals, I can check here and say, okay, well, here are the companies that are in that space. Oh, here's, DuPont. Okay, I can see what it's been doing over one day, 1 month, 6 months, kind of get a feel. This one's actually down, so not doing so well overall. But generally speaking, these stocks will probably be safer bets than most other stocks at this point.
Yeah, and this heat map, which I think is the closest terminology to what it is. I love this
Right.
feature in the Madison Trading House software. On a day to day, it really does help you get a true glance of the overall market
Hmm.
using the colors, using the sizes of the different sections. And so, if anyone is interested in getting one of these views on for yourself, for your team, things like that, we're going to go ahead and add a link to a 7-day trial in the captions. We invite everybody to come check it out. As we discussed last week, Mike, it's it's got majority of the features that you would find in a Bloomberg at a fraction of the cost. And
True.
we'll have to go over the specifics of those. But I do get the sense that I get a lot of the same information as I would in the Bloomberg terminal. And honestly, a Bloomberg terminal might be overkill for some of us, right? There's just so much in there
Right.
that the simplicity of Madison Trading House is amazing. And that's why we're doing the show, to introduce everybody and get everyone on board with the software.
Yep.
So let's go into some analysis, because that's one of the best parts of the show is we go into certain stocks and we figure out what the AI, the software, is telling us. And so one of the most popular names in the world is Amazon, and one of their unique you know, things coming up with them is that they're going to be doing a stock split. And so, I'm curious to know, what's the software telling us about that upcoming event? And I believe you said it's next month, right?
Yes,
June
in
6th.
June. I think officially. I'm trying to remember if it officially is done on June 6th, but the date's going to be June the 4th, and it's a 20-for-1 split. Okay. Now the software knows this automatically. We can actually locate this several ways. I can find it on the calendar. The calendar view actually will show me like upcoming events, like a stock split, etc., for different stocks. It could tell me earnings are coming up, so we can easily locate this. So of course, I was looking through information about different stocks. What events are coming up in the next month, and of course, Amazon was on there as a stock that's going to split. So if I click here, there it is, Amazon, right? Just like that, we find it. So SPL is saying split, and it's just showing me there was one stock on Saturday it's going to split. So on Monday is where you'll first see it trade at the new price. So the split will occur over the weekend, and then on Monday you'll actually see the stock at its new pricing. Now, this is a 20-for-1 split. What that means, folks, is that when this split occurs, Amazon's current price, which is really high, it's at $2,100. Not the all-time high, by the way, but a high price nonetheless. It's $2,100 a share. Once the split is done, you'll divide this price by 20, and that's what the new price will be. So everyone who has a share of Amazon, they're going to get exchange for 20 shares of the Amazon priced in to the equivalent of 1/20th per share of the old price. So you're not losing anything, just to be clear. You're just getting 20 shares in exchange for one share. 20 shares are going to be worth the same amount in total as that one share you just traded in. And it's all done automatically, of course. So you would have to be an owner of the stock by a certain date. I have to look up when that date is. But as long as you own the stock as of that date, then the split will, if you're still holding, then it will, if you still have the stock, I meant to say, you'll still be in the split. So if you have it over the weekend, your shares will split and then you'll see a different pricing. But looking at Amazon, what is interesting is that if you look at this 6 month chart, you can clearly see that Amazon is way, way down. I mean, this stock is suffering right now, just like a lot of other companies. Their earnings came out recently. They weren't as great as everyone would have expected. So Amazon's not looking so fantastic fundamentally. Its fundamentals right now are neutral. Okay, so here's how we find that, folks. So we look here. I have Amazon visible on our dashboard view. So this is our tear sheet view. And at the bottom, I have this tab that has three lines, and that's my fundamentals tab. This is the summary of it right here in this section. So if you look at it, if you have really good fundamentals, you'll see a lot of green. But we don't see a lot of green here. We see a few. Mostly what we're seeing is lots of reds and yellows. That's not good. That basically means that Amazon's not doing so well. It's not horrible. It's a mixed bag, but profitability and cash flow are not looking so good. Earnings are looking mostly positive. Growth is not growing at all. In fact, if you've looked at Amazon over years, let me go to our chart view. I'm going to click up on this tab. If I look at Amazon, let's say over the last 3 years on the daily chart, this is what it's been doing, going nowhere. It's just been flat. Volatile at the top, but flat. Now we're finally coming down. Earnings came in. The market was estimating that Amazon was going to earn $8.73 a share. They came in at only $4.24, so half. Really bad report. So as a result, basically people are seeing that Amazon's not making so much money anymore, which is actually bringing it back down to levels we haven't seen since just before the pandemic started. So the software basically is telling us that this is probably not the right time to invest into Amazon. It is good on its valuation because the price is low, so that part is good. But until they're able to get a solid on the bottom, which is the fundamentals, until that looks good, I would say wait. It doesn't mean Amazon's going anywhere. It'll still be around. And the analyst targets still look good. Okay, we're currently at 21.32, but analysts at minimum think the stock will be worth 2,800 by the time we get to the end of the next 12 months. But the median price expectation currently is still about 4,100. But I think as the weeks go by, these analysts are going to adjust those estimates lower. So just wait and see. For now, we don't have to do anything. Basically, the software is just saying if you see yellow down there, just means wait. Don't do anything. You don't have to do anything right now. Just let it ride. So we're going to keep an eye on this because Amazon does show some institutional activity coming in. Lots of institutional buyers are coming in now. But I like to wait until it's obvious that enough of them are coming in to create a trend. A lot of these may just be buyers that are long-term holders. They're not worried about what's going to happen next year. But for most of us, we're looking for a shorter-term gain on our portfolios. Something we can hold for weeks or months. So right now, we are definitely in the red for the technicals, as the software rightfully said. We have a very obvious downtrend that doesn't seem to be relenting at all. But otherwise, institutions are buying, which is why we got a green here. Otherwise, the valuation is fairly low, so that's why we got a green on the valuation section here. But I would wait until we see clear green down here before I'm even thinking about buying. I will wait. Most likely, you'll be able to get a lower price later. So why not?
Yeah, and Amazon's one of those unique businesses where they're involved in so many different things, right?
Right.
That at
Yeah.
some point you'd like to see that profitability start to turn green,
Right.
but also just the 20-for-1 stock split over time should become more friendly to the retail investors
It should.
who can now fork up the 200 bucks or so to 100 so bucks to get into Amazon. So we'll definitely keep this one on the dashboard.
We should. Yeah.
And I love to see some of these sectors update over the next couple of weeks. But great insight on Amazon. So
Sure.
moving on to our next stock, and I'm curious, is this one that came up in one of your daily scans? Because I'm unfamiliar with this company. Ticker symbol UPST.
Well, this came up because of the news. This was all over the news. So, if as long as you were watching earnings season, which I do, it's going to show up. So this was a big surprise. Now, to find it, we would just go to the screener. We would look for the calendar just to see what stocks are coming up to earnings. I usually look after the earnings are released to see what happened, or a lot of times actually am following the stock going into its earnings if it looks like there's some potential opportunity to do that. We do have to use a screener to, which we have, of course, here to let me know like if there's a stock coming up to earnings and what's it looking like right now. But this stock is a AI generated lending platform. Now that's all I can tell you. Like I know who they are, but to go any farther than that, I couldn't really say like, well, how's that exactly work? Like, what does their AI exactly do? But it's um it's a streamlined way of lending. In other words, they're basically saying the computer can figure out better than a human being who should be getting a loan and how much they should be paying. And the idea is to the consumer, you say, well, by using AI, you're going to get a better deal on your loan than you would if you went through a traditional lender, et cetera. So that's the sales pitch. But this company took a enormous hit. So let's just put this in perspective. Just before earnings, the stock was trading at about $77.13. After earnings, it's trading at 33.61 at the close. So this company lost over 50% of its value, just like that. Why? Because the company, when they reported their earnings, they basically told everyone that they don't see the growth potential. They basically are saying that they don't see their the forward guidance was poor. Basically, it's the best way I can say it. They just were saying negative things. If I go to the activity here, I'll go to the news. Let's actually look at this. So that was on the 9th, was it? I think. Wait a minute, let me double check. I think that was the 9th. No, it was the 10th. Okay. Well, the earnings came out on the ninth. Yes, I was right about that. So going back to here, if I look on the ninth, okay, here we go. Uh, Upstart deliver earnings and revenue surprises of 17.31% and 2.49%, respectively, for the quarter in March 2022. Do the numbers hold clues what lies for stock ahead? So their numbers didn't actually look bad on the report, as I remember, but they're basically the market responded to their lowered outlook. So they just basically said, "Look, we're not expecting things to be quite as good going forward," right? So it says here like 60% in Tuesday morning trading after the company cut its forecast for the full year, warning that the current macroeconomic climate is expected to weigh on loan volume. What they're basically saying is not too many people are going to be looking for loans like we were expecting. And if that's the case, then that's a problem. If your business is a lender and you're not getting loans, you got problems. Now, of course, interest rates going up is going to be a huge factor. So that and the fact that the economy looks like we're heading into significant recession. I mean, Europe already basically is there, and we're not far behind. China may go into a bit of a recession due to COVID, but otherwise, I think they're economically are okay. But with all these energy prices and inflation, we're dealing with some serious issues here. So lending does not tend to be a popular thing for people when they don't have money or they have less money or they're worried. People don't tend to want to borrow when they think times are getting worse, right? So you look at your gas tank. A statistic I heard the other day, which blew my mind, that if you fill up, I don't regularly drive, just to be clear, folks. That's why I don't think about gas prices at hardly at all because it's already factored into, I get my Uber or whatever. I just haven't been I don't like to drive in the city much. I've been like that for years. But when you look at the cost, right? It costs like what, $50 in this city. I don't even know what it costs other places, but $50 to fill up like an economy car tank. I mean, that's crazy. Like, I mean, that was like what you used to pay maybe 20 years ago. If you had like a big SUV that was a gas guzzler or something, you might pay 50 or $100. Now everyone's paying that. So it's to the point now where this is really squeezing people. Like you're paying for everything. I looked at my gas bill, it's double what it was last year. So I'm like, wow. I mean, prices are really going up. Uh, I looked at a bag of chicken, chicken breasts. They cost $15 now. And I'm like, what? For chicken breasts? I mean, I used to be able to pay like $8 for that stuff. So, I mean, it's not the end of the world, but at the same time, I understand like it's not a significant cost to me, I'll admit, but at the same time, it is a significant cost to a lot of people. And that's the reality of it. So I think that, especially if you have a family and everything, like a lot of people that depend on you, I can see how these costs really can add up depending on your income. So I think a lot of people are really struggling here, and loans are just not going to be attractive. And if you got to pay higher interest rates, forget about it. Like, why would anyone want to? So, in short, the software is telling us that technically Upstart is bad. That's obvious. It's down sharply, but also it's showing us that insiders, well, I want to skip the actual insiders since they're not the big deal here. The institutional ownership dropped sharply, down 8.93%. And you have 85 more institutions selling this, more funds selling this stock than buying it. That's bad. That just basically means everyone's saying, nope, we're throwing this away. This is garbage now. So, unfortunately, if you're an investor into this, you need to make a hard decision now because there's a good chance the stock is going to go lower after this. Usually, when you have bad news, it starts off as a trickle and then it starts to flood in. So, you want to be careful if you're in this. If you're trying to bargain hunt, I would say don't right now. All the signs indicate that this is questionable. It's still, all the old analyst estimates are still there, but these are going to change shortly as these guys, give out more of their estimates about the future. So we're just past earnings. Within about a week, we'll see the real analyst targets as they all trickle in. And I can guarantee that the majority of them are going to be lower. So With that in mind, I would stay clear of this stock. I know a lot of people ask me if it's a buy. I would say no, don't buy it. I would stay far away from this. If you're going to take a chance on a stock that's down, you're better off buying Amazon because at least they still have a business that's doing well overall, even if it's losing some profitability. But Upstart really questionable right now.
Yeah, and it seems like you made a really good case there for maybe even taking a short type of position
Possibly.
if the interest rates continue to increase at the more than expected rate. And that's the beauty of the software is you do a quick analysis, run through all the different sections that impact the stock's price and make a decision on whether you want to invest, you want to hold, you want to pass, you want to keep it on the dashboard. So I'm kind of, looking at this one to keep going down. So I'm going to keep this on the dashboard just as a way to keep track of the AI's performance because I'm loving the feedback that I'm getting. And
Cool.
so with that being said, let's turn to the Madison Trading House platform real quick.
Hmm.
And one of the things that I think a lot of people are curious about is this home view, right?
Right.
So someone who's logging into the platform for the very first time um, is getting a lot of information thrown at them. So I'm
Right.
curious as to know, what you can build with this home view, right? What can I do to make it easy so that I can log in, get the information that I need, and make trading decisions from that?
Great question. Okay, so this is a standard view as we discussed, and it does have a lot of things. So this is more like what a person who wants to just get a sense of what the overall market is doing, like me. Like I trade every day, so therefore, when I log in, I want to see where things are generally at. Oh, by the way, before I forget, guys, we also have crypto data here too, so you can actually view all the more or less major pairs. Like if I want to look at Bitcoin, I click here, I can see a summary of some of the things that are happening with it: market cap, price change over time, 6 month view, 3 month view, etc. So these are all there too. So just letting you guys know that these are, and then we can look at some fundamentals like holders, profit to loss, price correlation. Of course, with Bitcoin, it's 100%. Holders by time held. These are good stats to know. So we'll go over this in another lesson. But I just want you guys to know that for those of you who are involved in that space, we got that too. But going here to our custom page, right? So the general market page is the home page. But if I go to my custom page, I can now look at these widgets. Now, widgets are these little boxes that are here. So you have a widget there, a widget here, a widget here, there. Okay. And also here, these are all widgets. So if I go here, I can add widgets. I can add a chart, quotes, news, or market news. These are the four things I can add. So right here, I have a chart. Right here, I have a summary of a stock, and then over here, I've got news. So basically, what I can do is if I want to rearrange these, I click right here on rearrange, and I can move them around to organize them as I see fit. So I got the market news at the bottom, but maybe I want it at the top. Okay. So I put my market news at the top. Sorry. There we go. And now I got that rearranged. And of course, I want these, sorry, to reorganize as well. So I want the chart, quote, and the news. Oops. Sorry, let me do that again. There we go. Actually, I still messed that up. So, but anyway, you get the point. So, if I go here and say save, now it's going to rearrange it where I have my market headlines here. I've got Apple there, and just like you would expect, if I change the symbol here. And by the way, there's more down below. But if I change the symbol here to BAC, now I've got Bank of America here and Bank of America there because these two are linked to the number two, whereas Netflix is linked to number one. This is my general market news. So it just tells me, okay, general market headlines, nothing specific to a particular stock. But this view here is specific to a stock. So if I have Netflix here, it's going to show me any news in the feed that's relevant to Netflix, right? And if I want to go here and rearrange again, I can get rid of components. So let's say I don't want the ones that are here at the bottom. So I could just click off to get rid of them. Sorry, 1 second. Let me do that again. Uh, for some reason, my mouse is not working, but you get the point. So I can rearrange, I can close out, I can add widgets, take them away. So if I want to add another market news, I just click here. Or sorry, I click here because I already have market news added. And if I want to add 2 more news feeds for general stocks, let's say, yeah, 2, I'll hit add, and they just drop them here. And then I can do whatever I want. So if I hit save, now I've got these 2 empty boxes. They're not tied to anything, but I can type in anything that I want. AT&T, or let's go Google. There you, there you go. And now I've got 2 news feeds for those. So the idea here is just I can customize the view however I want. I can move things around. I can rearrange the menus, etc. And if I want to, sorry, if I want to get rid of anything, I forgot I just click here. I was trying to do it when I was rearranging, which won't work. So I can just exile them as I go. There you go. And then I go back to only these, right? So now I only have these 3 visible. If I want to get rid of everything, I can. Now I'm left with market news, and I could just say, all right, well, let me add something else. So first I want to save this. Then I'm going to go back to here, and let's add some charts. I want to add 3. There you go. And let's say I also want to add some quotes. So I'll just add 3 there. There you go. So I got my 3 quotes, and I just arrange them as I feel I want to. So I can go rearrange, and then I could just drag them around to make them organized the way that I want. So if I want all the charts down here, I could just do like that. Okay. And I'm sorry, trying to get this one down there. Let me make the market headlines at the bottom. There you go. So I have charts, right? Widget, 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 done. Okay, I'll say save. Here they are. And then I could just link them the way that I want. So if I want these linked like so, now they're all linked. So now if I change this to J&J, Johnson & Johnson, okay, I want that one. So now it populates the chart down there. If I want Merck, okay, populates it down there. And if I want Apple, there it is, populates it right there. Now I've got my quotes, I've got my charts, and I've got my market headlines. So you can rearrange this, like I said, any way you want. I'm saving it now, but it just basically allows you to customize the page as you see fit. So it's not going to have every component that's on the main page. This is more something for people who want to just kind of look at a few stocks at a time. So since you can see that, it just allows me to be able to rearrange this as I see fit, right? And if I want to look at the broad market, I just go back here and I can see the broad market. And of course, once I go back to my custom page, there it is again. Okay.
Yeah, it might be a great tool when you're trying to do some analysis of multiple stocks in the
Right.
same industry to try and get some correlation or just comparisons. And lovely. I mean, this looks super sophisticated, and someone who's in and out of charts day in and day out. I could definitely see this saving some time and being extremely valuable. So as we mentioned earlier in the show, there is a link in the chat for anyone that's interested in grabbing a copy of the Madison Trading House software. At the same time, if anyone has any specific questions as to the features, what it can do, things of that nature, feel free to drop it into the chat, and Mike and the team will try and get back to you as soon as they can. Man, Mike, me and you have been, trading for almost 20 years now, and we've seen a lot of softwares, and
Yep.
every time we go through these, I'm more and more impressed with the features and the rate at which you guys are also adding new features, enhancing. That's kind of why you brought the crypto part up, because I was talking earlier, man, cryptos are getting smashed and
Right.
they're getting killed out here. And it looks like the crypto side is going to be evolving too. So that's exciting.
Yep.
So great all around stuff from the team at Madison Trading House. I highly recommend everyone go check that out. At
Awesome.
the same time, if you're enjoying the content on Spotify, on YouTube, on Facebook, on Twitter, hit that follow, hit that subscribe button. We do appreciate the love. And midweek heading into the rest of the week, Mike, anything we should be looking forward to, or anything we should keep an eye on?
Good question. As far as, let me just check the calendar really quick. Go up here. So, oh, there goes my light. 1 second. So, as
That's a,
far as this week is concerned, um, or next week, sorry, let's see, we do have a holiday on the 30th. So that's one thing. Well, that's not next week, but that's at the end of the month. But coming up next week, I don't really see anything. We got some earnings coming out, but we got let's see, TTWO. We've got a few others, but don't really see anything major to look out for right now, as far as stocks are concerned. Now, as far as the calendar, economic calendar is concerned, I'm just going to look at another screen for that. But let's see. Next week we've got well, later this week we do have PPI coming out tomorrow, and core PPI, as well as unemployment claims. These could add more fuel to the fire as far as expectations that the Fed's going to raise. The FOMC member Mester will be speaking. She's actually the person. I think it's Mester's the lady, but I think she was the one that said that the 75 basis point raise was probably something that could happen at the end of the year. So I think that was the main thing. So she's going to be speaking again, and I think that's one we probably want to pay attention to. Other that, next week we got more inflation. Sorry, next week we've got. Sorry, I'm looking at the wrong calendar here. We've got. Let's see. We've got core retail sales and retail sales on the 17th. And we're going to have Treasury currency report on Friday, the 20th. So looks like a lot of stuff will be coming down the pipe at the end of this week. And then next week, it looks like it's mostly going to be calm, except for core retail sales and retail sales. So we'll definitely look at those on Tuesday. But anything that comes out that doesn't look so good is going to hurt the markets even more. The only hope I guess anyone would have is that it looks so bad that the Fed may not want to raise rates, but I doubt that's going to be the case.
Yeah, so it sounds like all the news is very much inflation related, whether
Right.
it'll help calm or add fuel to the fire. We'll have to see what the reactions are with those releases.
Yep.
All right, cool. So
Awesome.
with that, we appreciate everybody tuning in. And if you haven't already grabbed the demo of the Madison Trading House software, please do. It's phenomenal. I guarantee you it will improve your overall approach to investing and knowing what's going on in the market. And please drop any questions that you might have. And with that, we'll catch everybody next week. Appreciate the time, peace, and love. And, adios, everybody.
Take care, folks. Take